Hello guys and welcome back to another video at the Capital Traders Group. Now in this video I'm going to be going over the dollar index and how and why it can be used to one, increase your accuracy on most trading pairs when it comes to FX, commodities, and even crypto, right? The dollar index is very important. It's crucial when it comes to trading, and it can also limit your screen time as well, because if you understand where the dollar is and you have your complete analysis, you can also have a good understanding of where price will move of everything that is crossed and paired with the dollar. And this is something I'm going to explain momentarily. But in essence, in this video, I'm going to be showing you how you can build your bias on the DXY and use it to trade on other pairs, and secondly, how you can use to build confluences and increase your probability of winning more trades in the future. And it's very simple, but it can be very useful, because I see a lot of new traders in particular who make this mistake of they have 100 pairs on their watch list and they get confused when they're trying to analyze all of them at the same time. It's not going to work, right? Pro traders, you'll realize this, have very few pairs and assets on their watch list, and when it comes to a certain week with high fundamentals or a lot of news around the corner, they only look to trade one or two pairs most of the time anyways, mainly because it allows them to narrow their focus and have a much better understanding of where price is going to go and what it's going to do, and map out the probabilities of each scenario and how to profit from each scenario, because that's the point you should understand. Our job is not to predict, it is to react. That's how we make money. I can't tell the future, all right? If I could, I'd be a trillionaire. But what we can do is forecast and understand the probability of certain scenarios playing out and map them out and be ready for them. Because if that scenario does play out, we can make money. It's very simple. You need to be flexible and fluid, just like the market is, okay? Now, the DXY is, in essence, it's correlated, right? And it's negatively correlated to most assets. Now, what I mean by this is simple. The DXY is paired against mostly all FX pairs, and we call them the USD majors. It's also paired with all cryptos, and also paired with commodities such as gold, right? You have XAU USD, which is gold against the dollar, right? Very simple understanding of it. But in essence, whatever the USD does, it will have a similar or opposite effect on all USD majors, okay? Now, for example, let's look at this week's Friday's price action. I'm going to make this very simple and explain it as easy as I can. We have, from this price action, what do we see on Friday? And we had a lot of high impact news this Friday, if you guys did trade it, right? We have a range, which is what you refer to as accumulation, manipulation, and expansion. This is a more of a manipulative move that does occur in the market a lot of the times. But in essence, what you see, it's referred to as a power of three. But in essence, what you see is a range. Then you have all the buyers stopped out who are buying at these levels, at the lows of the range, stopped out to trick sellers into the market, to trap them into the market before the real move is made to the upside. This works the same way on the opposite side, right? Where it ranges like that, manipulates, and then pushes down to expand to the downside, right? It's referred to as a power of three. Very simple pattern that can be trading on all assets, and it does happen frequently as well. So that's in essence the price action we saw play out this Friday, right? And news was a big factor to play with this as well, right? So let's mark this out as red, and then let's make the next one green, just so it's better to illustrate it this way, so you guys can have a bit easier understanding of it, right? Range, manipulation, and then expansion to the upside. Now, what I'm anticipating for the rest of the week to play is the dollar to continue on with the expansion with smaller pullbacks to at least come up to this level, mainly because we have a large chunk of imbalance that will get filled likely in the coming weeks at least. And we also have a small gap above here as well, which I will mark out from this zone. So there is a lot more bullish push to come overall on the dollar. That is my analysis, but that is just something I want to quickly outline. Right now, if the DXY, which if the dollar index is bullish, let's say for example Euro USD, then Euro USD will be bearish. Why? Because it's negatively correlated. Because it's paired with the dollar, if something is paired against the dollar, what naturally happens is as the asset it's paired with, in this case it's the dollar, if the USD gains strength, naturally the euro is going to lose strength if it's paired against it, right? And this goes with all things. You see it on crypto less often, mainly because crypto is a beast of its own. But you'll backtest it a lot of the time. You'll see the same sort of, on at least on macro perspective, you'll see the same sort of movements play out. Yeah, so if the DXY is bullish, then Euro USD is bearish, right? But if the USD, so if you go on, again, if you go on here, if it's something that's not paired against the dollar, so for example, USD CHF, it's not going to be bearish, it's going to be bullish, because mainly because the dollar is it's not paired against the dollar is the major. So in this scenario, when the dollar gained strength, so did USD CHF pair. Okay, again, it's not going to play out exactly, but it's going to give you a good inclination of where strength is going to enter the market. So when you are analyzing pairs, let's say for example on USD CHF, because it's paired with the Swiss franc, so it's going to have its own characteristics of how it moves, you can understand of where there's going to be likely gain of strength in the market, and then you can start understanding the probabilities of buys entering into the market, so you can start favoring buys. Okay, that's one of the simplest ways you can look and build confidence, is just by analyzing the DXY. And this is what I tell all traders as well. First thing foremost, if you're going to trade the majors, as most of us will do, right, at least I presume, look at the DXY first and foremost. Always analyze the DXY first. Have a better understanding of what the DXY is going to do on the macro perspective, and then swing down on the lower time frame to have a good understanding of what's going to do, at least on the intraday wise. Okay, so this is the example of DXY. Let's look at another example. Let's look at gold. What did we see? Right, we have a pattern of three. Right, we have range, manipulation, and expansion. What did we see on gold this past week? We had range. Let me get the right. We had range, manipulation, and then simply we had our expansion to the downside, right? Right, very simple, right? This is, again, negatively correlated, but it's correlated nonetheless. Just by having that simple understanding of what the dollar, the DXY is doing, you can look for trades on multiple pairs. Let's look on something else. Let's look on EU, because EU provided quite a few opportunities this week. Again, traders in our mentorship group should know, because we did cover this. But again, same scenario. We had the range. We had a bigger manipulation spike to the upside, right? Because this pair was a lot more volatile this week. As last week it was chopping traders in the chop, before it made its expansive move to the downside. And naturally, you should understand, as barring with my analysis on the DXY, what I'm anticipating on Euro USD this coming week is price to come back to fill in my imbalance zone, which is all the way down here. Okay, to this zone here. This is my main imbalance fill zone. This is the outer zone of my OB, and this is the main inner block, which it will at least fill a wick into. It won't need to trade or chop within this zone, but it will leave at least a wick fill, what I refer to as a wick fill, into this region, mainly just to fulfill that price inefficiency. Because we have a large, as we had price inefficiency here, we have a very, very large or nice, what I refer to price inefficiency here, and that will allow me to again build confluences to understand a reaction from this level, to look for at least intraday longs once price does come down to the zone. But for next week, what I'll be looking for, again, correlating with my analysis on DXY, building that confluence, I'll be looking for pullbacks, right? Smaller pullbacks, but in essence, the small that bearish push to come back into my main zone of 1.059 before I'll be looking for potential intraday longs to look for nice bullish reactions from. But that is the same analysis, right? Simply by simply understanding where the DXY is, and where it's going to go. Again, I mentioned above here on 1.05 there is a gap as well, so there's a very likely scenario we see a nice little reaction from this zone to trap buyers before we see that next leg down, because of that main main zone at 1.05, we have a gap that needs to get filled, and I expect because of that gap, EU will obviously, because it's correlated, negatively correlated, it will go further down after we see a nice reaction, after buyers interact from this level. Then it can provide more shorting opportunities as well. So again, it can show you very, very simply, as I just illustrated, how the DXY can be used to build confluences not only, and understand the bias of other pairs when it comes to a lot of other trading pairs in particular, right? Same sort of with the AUD USD. GPB USD is a bit different, but in essence it still moves the same when there is strength on DXY. Okay. Again, gold is a very simple and easy one as well. Gold is a lot more volatile, so I love trading gold when we see these pushes come in on the dollar, because it reacts much more violently and allows you to position yourself on them nice swing plays, right? Again, because of that push on the downside on gold, and that potential more push to come on DXY, I'm going to be next week looking for those smaller chops to the upside as pullbacks before we see that next violent push to the downside. Okay, very, very simple, right? Simply by analyzing one asset class, you can have a good understanding and bias of all these other pairs, even crypto as well, at least on the macro scale. But I hope you guys enjoy this video. If you did and you did extract some value from it, please do leave a like and subscribe. It will be very much appreciated. With all that said and done, I'll see you guys on the next one. Bye bye.